Welcome to Meet the Press Now. I'm Chuck Todd. We begin today with the administration's latest efforts to fight inflation and rhetorically try to avoid the label of a recession. With roughly 100 days to go until the midterm elections. This afternoon, the Federal Reserve announced another rate hike of 0.75 of a percentage point. It matches the increase from last month, which was at the time the biggest hike in interest rates in nearly 30 years. Here's the Federal Reserve Chairman Jerome Powell speaking to reporters following this afternoon's formal announcement.
From the standpoint of our congressional mandate to promote maximum employment and price stability, the current picture is plain to see. The labor market is extremely tight, and inflation is much too high. Against this backdrop, today the FOMC raised its policy interest rate by 0.75 of a percentage point and anticipates that ongoing increases in the target range for the federal funds rate will be appropriate.
Now, the markets responded favorably to the news. They went ahead and created an estimation of something bigger that might happen, so then that way they could bet on this news, right? It seems that's what Wall Street likes to do. Meanwhile, Powell's comments suggesting he will slow the pace of those rate hikes in the near term also seem to provide a little boost of confidence for investors. But the real big question, of course, is can the Fed successfully tamp down demand enough without triggering a recession, the so-called soft landing? Already seeing some evidence that its strategy is having some effect. Housing demand, as measured by pending home sales, fell 20% last month compared to a year ago. That is thanks to rising mortgage rates, a direct result to these interest rate hikes. Powell's remarks come ahead of Treasury Secretary Janet Yellen's press conference tomorrow as the administration prepares for tomorrow's GDP report, which could show a second straight quarter of overall decline in output for this economy. White House, meanwhile, is crisscrossing the airwaves in an effort to downplay fears, essentially trying to have a rhetorical debate about what to label the current economic direction. Are we headed towards a recession? Here's how the Biden economic team is putting it.
I mean, I think we've gotten into a technical discussion about what constitutes a recession. And I think, look, bringing the facts to the table is something that we as economic advisors have to do.
2 negative quarters of GDP growth is not the technical definition of recession. It's not the definition that economists have traditionally relied on.
Recession is a broad-based contraction that affects many sectors of the economy. We just don't have that.
Folks, recession is the R word no administration wants to say, especially in an election year. But if it's the cure to runaway inflation, do they have much of a choice than to trigger one?
Thanks for watching our YouTube channel. Follow today's top stories and breaking news by downloading the NBC News app.